Trump has just announced a sweeping new tariff on cars.
U.S. President Donald Trump has announced a 25% tariff on all car and light truck imports into the country.
What we're going to be doing is a 25% tariff on all cars that are not made in the United States.
Canada will respond to the U.S. auto tariffs.
Well, those tariffs from the United States are already having an impact here at home, with many saying the auto industry will be the hardest hit.
Around 5:30, he came out and he said, tariffs on every car that gets imported into the U.S. from around the world. Then he talked about chips, then he talked about wood.
Canada for many years. It was one of the keystones of the North American automotive industry. Thanks to its commercial integration with the U.S., borders became almost invisible. Every part produced passed through common facilities, and the two countries were considered complementary. But on April 2, 2025, a move from Washington shattered this smooth cooperation. In response to U.S. President Trump's permanent auto tariffs, Prime Minister Mark Carney decided to impose a 25% tax on U.S. cars. Trucks and Vans Ottawa's announcement sparked comments that the border has closed the era of friendship. On the same day, Carney told the press, "We have no choice but to protect our commercial sovereignty." This historic step is likely to shake the more than $80 billion automotive exchange between the two countries to its foundations, and especially American giants such as Tesla, GMC, and Ford are likely to face billions of dollars in losses. Canada had a structure in which automobiles and automotive parts accounted for 18% of its total exports, which reached $400 billion by the end of 2024. The U.S. was the main buyer of these products. Now with the 25% tariff, it will be much more costly for Detroit's giant brands to enter the Canadian market than before. At a meeting on April 3, 2025, Karen said, "Every vehicle coming from the U.S. will now pay an extra price. This is not a retaliation. This is a struggle for sovereignty." The American media then commented, "The trade barrier between Trump's tariff wall and Canada has now been broken, and both sides are now looking for a new order." When we look at the U.S. automotive industry, the picture is quite fragile. Brands such as GMC, Ford, and Tesla have long viewed the Canadian market as a protracted home market. Ford and GM, which manufacture in Ontario, were easily selling goods not only into Canada, but also into the U.S., taking advantage of the economic scale. Thanks to the facilities here, now parts imported from the U.S. or vehicles manufactured there and shipped to Canada will incur an additional 25% cost. This will directly weaken their competitiveness and may lead to Canadian consumers not being as receptive to American cars as they used to be. Experts argue that companies have no choice but to reflect this additional burden on prices, which will make market loss inevitable. Tesla, in particular, is on the agenda as the biggest target of these developments by 2024. The company, which increased its electric vehicle sales in Canada to over 22,000 and achieved a turnover of around $1.5 billion, thanks to incentives, had already entered a difficult period. With Ottawa's freeze on subsidies, now the 25% tariff means that Tesla models will become more expensive. In the Canadian market, the 13% drop in Tesla shares last month is considered a harbinger of this situation. On social media, the view that Tesla is on the Carney government's radar as a symbolic figure is often shared, because Tesla, being a US-based technology giant, is also seen as a symbol of Trump's protectionism policies. Carney's move will expose not only Tesla, but also Ford and GM to billions of dollars in export losses, according to figures from the Canadian Automotive Importers Association. In 2024, these three brands have brought about $26 billion worth of vehicles into Canada. With the new tariff, it is estimated that these exports will shrink by at least 30 to 35% because companies have to cover the 25% additional tax cost, either by increasing prices or by sacrificing profit margins. In both cases, profitability will fall, so the total loss by the end of the year could fluctuate between $8 and $9 billion. While some optimists argue that American brands can avoid this tax if they build factories in Canada and produce here, it is not easy to realize such an investment in the short term. It is estimated that GMC, Ford, Stellantis, Chrysler, Jeep, Ram, and Tesla's exports to Canada, which are generally referred to as Detroit-based, account for $25 to $30 billion. Of this $35 to $45 billion, models like Tesla, all of which are manufactured in the US and brought to Canada, fall directly under the 25% tariff. While certain models from GM and Ford are made in Canada, many SUV pickup lines come from U.S. factories. Most estimates suggest that at least 70% of these companies' total Canadian sales would be subject to the tariff. A 25% tariff is not normally a direct ploy on 25% on the sticker price of imported vehicles, as manufacturers pass some of it onto prices and some to their own profit margins. Nevertheless, it is a fact that the cost to the end seller rises significantly. Estimates suggest that it could lead to a 20% increase in the final consumer price. These developments will inevitably have an impact on the U.S. Canada trade volume of 30% contraction is expected in the automotive side. Of the total trade volume of more than $720 billion between the two countries, since every link in the supply chain is interconnected, not only ready-made vehicles, but also spare parts, accessories, and even technology licenses will be negatively affected. The impact of such a shock has already started to be felt in the U.S. stock markets on April 3, 2025. Tesla shares lost 4% of their value in one day. GMC and Ford also reportedly saw losses of between 2% and 3%, respectively. Some analysts say if this move continues, this loss could double within the year, with plans to retaliate against the Chinese market, especially in the field of electric vehicles and batteries. It is emphasized that American automotive brands will have difficulty in global competition. So what will be the attitude of Canadian consumers? Some polls show that a significant portion of the public supports this retaliation on the grounds that Trump policies are unfair. Recently, Canadian slogans have become widespread on social media. And although there is no clear data on the tendency to boycott American brands, it is known that small protests have emerged. Tesla showrooms in particular were protested by small groups after the subsidy cancellation decision on March 25th. Now Carney's 25% tariff could further dampen already cooling consumer interest. This will make it even more difficult for brands like Tesla and Ford to compete with domestic alternatives or Asian manufacturers. I guess no one is expecting a miracle to turn the tide in a short time. It is also important to look behind the scenes of this trade tension. On April 2, 2025, U.S. President Trump said this time we're including Canada, even though it seemed that he had previously excluded Canada from the 25% auto tariff, and the current government responded harshly in just one day. Ottawa, which said, "We will also introduce a 25% tax," announced the final details on April 3rd. According to the information reflected in the press, Carney characterizes Trump's tariffs as unilateral and unfair. On April 4, 2025, he said in his speech that Canada's economy will not surrender, and our response will be clear to any step that crosses the line. This statement was covered in the international media, with the headline "A New Page in the Ottawa-Washington Line." Canada's automotive imports are not only American vehicles. European and Asian brands also have a significant share. However, the share of U.S. brands in total sales is around 42%. The Carney administration's 25% tax could reduce this share, opening a window of opportunity for European and Asian competitors. Some European manufacturers are signaling that we may make additional investments in our Canadian plants. If that happens, the supply chain advantage that giants like Ford and GM enjoy in Canada could be eroded. A new manufacturing rivalry is emerging, and it is not yet clear who will win, say automotive analysts. Others say this step cannot be taken without a price. Canadian workers may also suffer in the long run. Some warn one of the most curious issues is where Tesla's situation will evolve. Although the company achieved a turnover of more than $1.5 billion in Canada by the end of 2024, it had to reduce its deliveries by 13% in the first quarter of 2025 as federal incentives stopped and the market cooled. Now a 25% tariff has been added, making Tesla models more expensive than their competitors. Canadian consumers are drawing attention on social media with their "I can't buy a Tesla, prices have skyrocketed" complaints. A group of entrepreneurs launched a "Let's Support Canadian Domestic Electric Vehicle Initiatives" campaign. These developments may further deepen the negative trend in Tesla shares. It is said that the company's loss of value in the stock market could lead to a meltdown of $10 billion. In a few weeks, Ford and GMC are not comfortable either. Although they have production lines in Canada, critical parts for many models come from the U.S. As the tariff makes imported inputs more expensive, costs will rise on the final assembly side. If companies want to shift production entirely to Canada, They will need to invest in new facilities and labor, which seems impossible in the short term. Thus, automotive giants will be caught between a rock and a hard place. On both the US and Canadian fronts, the logistics network will be reshaped. Perhaps more parts will be brought in from Europe and Asia. Some experts say, however, none of these plans are enough to eliminate a tariff wall, as high as 25% in an instant. The effects on the US stock market cannot be ignored either. In the morning session on April 4, 2025, Tesla, Ford, and GM stocks continued their downtrend. If there is no diplomatic solution, a long-term depreciation is inevitable, say analysts. Although some investors are looking for arbitrage opportunities, the sudden volatility of the trade war increases the risks. Moreover, rumors that the Trump administration may turn to other sectors for new tariffs make markets nervous. In the past weeks, a similar situation had occurred in steel and aluminum, and then spread to automotive. Now this shakeup in the automotive axis, which is considered to be the backbone of the US-Canada trade partnership, is not surprising to anyone. On the Canadian side, the polls of public opinion suggests that reservations about US brands are on the rise, especially in industrial provinces such as Ontario and Quebec. Trump's trade policies, which are becoming more aggressive by 2025, are strengthening the feeling among Canadians that, if they are getting tougher, we don't have to give in addition. European and Asian competitors have made serious strides in the electric vehicle market in the last few years. If American brands like Tesla are at a disadvantage, new leaders could emerge in the Canadian market. Some say Tesla's share could drop from 26% to 15%. If this projection comes true, the competitive balance in the electric vehicle segment will be upset. So what can happen in this tension? Some experts believe that if Trump's tariffs are long-lasting, and Canada continues to retaliate, both sides will suffer losses. Another scenario is that Canada and the US could sit down and work out a new deal, but the political atmosphere makes that unlikely. Unless Trump backs down, we're not going to get full compliance at any point. Carney said this is not a discourse that leaves the door to diplomacy open. In a speech on April 3, 2025, Carney even reproached Washington, saying it was a big mistake to be so dependent on a country we have considered a friend for years, and now we are paying the price. These words were shared on social media with the headlines, "Canada is emerging from the US shadow." Experts estimate that by the end of 2025, the US automotive industry could suffer losses of $13 to $18 billion. This figure will result from both sales declines and the direct effects of the 25% tariff. Tesla, GMC, and Ford in particular will feel the shock in the first place. Brands like Chrysler and Jeep are also at risk, but they have a more limited sales share in Canada. Tesla's heavy hit comes at a time when the company is already reeling from the global chip crisis and technological competition. Some speculate that Tesla may pull out of Canada or at least suspend new investments. This could undermine the development of electric vehicle infrastructure. Suppose automotive and parts exports from the US to Canada totaled $40 billion in 2024. A medium scenario after the 25% tariff, prices will rise and sales volumes will fall. There's a double effect in an average scenario. A 25% tariff could reduce U.S. automotive exports to Canada by $6,010 billion. The additional tax burden of $7 to $8 billion on the remaining sales would put producers and consumers at a joint loss. A total cost of $13 to $18 billion can be estimated as the direct and indirect loss of the U.S. automotive sector. By the end of 2025, companies such as GM, Ford, and Tesla could face revenue losses or additional costs in excess of $1 to $2 billion each. For relatively young and high-growth companies like Tesla, the impact could be proportionally much larger. Double-digit losses in automotive stocks on U.S. stock exchanges could wipe tens of billions of dollars off market capitalization in the long run as the relationship between Canada and the U.S., based on the automotive supply chain, is damaged. New production and investment decisions may also be postponed or shifted to different geographies. In short, a tax wall as high as 25% from Canada will be reflected as double-digit billion-dollar losses to U.S. automotive giants in a short period of time. With market share erosion, price hikes, and reduced mutual trade volume, it would not be surprising to see a loss-cost band of $13–18 billion for the rest of 2025. A conflict of this magnitude will not only push vehicle prices to the brink, but also the spare parts market. Many service centers and dealerships in the US have been serving Canadian customers with low tariffs if these channels become more expensive. It is estimated that even small shopkeepers will suffer likewise. When the prices of spare parts from the US rise within Canada, repair costs will increase, and customers may turn to cheaper alternatives. In short, Karen's 25% tariff is a move that hits much more than a car. Economists often use the phrase, a domino effect that will erode both sides in the medium term. According to some reports in the Canadian press, European and Asian car brands are accelerating investment talks with the Ottawa administration, especially Asian groups such as Volkswagen and Honda. Kia from Europe are warming up to the idea that we can produce in Canada and export to the US if these projects go ahead. The pressure on Ford and GM's Ontario plants will increase. According to experts, the new wave of investment could further erode the share of US brands, while making Canada an automotive center of attraction. In the long run, of course, all this also depends on the Trump administration's retaliation and trade policy. What is clear is that automotive tensions between the US and Canada will remain on the agenda for a long time to come. To summarize this picture, Karen's 25% tax outburst shows that the US responded to Trump tariffs with a bigger punch than expected. Especially giants like Tesla, Ford, and GMC are at risk of billions of dollars in losses. Public opinion in Canada supports this move. The US administration says we will not back down. And diplomacy seems to be blocked for now. Everything from stock market values to consumer psychology is at stake. So who will be the winner of this trade war? Some say no one will win. Others say Canada will finally put its own industry at the forefront. On the American side, the view that the era of cheap cars is over is on the rise. While Canada is on the line of, we are expressing our long-accumulated discomfort. What do you think about this? Will Canada's decision to impose a 25% tax on vehicles coming from the US only hit American brands? Or will it lead to the total collapse of the North American automotive ecosystem? Can companies like Tesla and Ford develop new strategies to overcome this obstacle? Or will they partially abandon the Canadian market? Don't forget to leave us your comments, like this post, and subscribe to our channel. It seems that the automotive industry in North America is entering a stormy period. We'll be following new developments moment by moment, because this great tug of war between the two neighbors has the power to change not only the prices of vehicles on the shelves, but also the course of the global economy. Take care of yourselves, and we will meet again in the next editions.